The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, happy Thursday to you. I always enjoy hearing that Tom Petty music as the show gets started to get us going here. Learning to Fly, kind of an optimistic, bullish type of song, you might say. I guess it's probably better than Free Fallin' if you're a bull, though that might be a bearish Tom Petty musical indicator. In any case, we are learning to fly here on the Small Cap Roundup. As your announcer there said, I am Kate Stalter. Just checking out what's going on so far today. Last time I was on the show was Tuesday. I actually filled in for Tom in the second hour of his show on Tuesday, where we had all the market carnage. And today we've got that broke little Peloponnesian nation back in the news. Traders are more optimistic. Again today, happiness is back about Greece's creditors being willing to accept a lower payback on their bond investments. And last I looked, I wrote the morning update today for Real Money over at TheStreet.com. And at that point, about 60% of the creditors had agreed to accept less. Now, the deadline is coming up in just a few hours, 3 p.m. Eastern. So markets trading higher. Ahead of that, European close is just a little less than half an hour away, and European indexes have been trading higher throughout the session. Also, we had the government data on new unemployment filings this morning, came in higher than expected. In other words, more new claims filed. You know, it does seem from what I've read over the last few months, and probably many of you are seeing the same thing, that the real unemployment rate is higher than what's reflected in the Labor Department data. But in any case, that data this morning is not hurting day two of our rebound after all that damage on Tuesday. So taking a look at small caps, there we go. I've put a chart of the IWM up there on Tiger TV. Of course, that's the Russell 2000 ETF. And just taking a look at a daily chart here. This is actually a 40-day line that you're putting here, just because I like the 40-week line. I typically show weekly charts up here on Tiger TV, and I didn't want to change the indicators, so you're actually looking at just a 40-day line right here, a black line if you're watching with me here on Tiger TV. And you're seeing nice support at for the IWM right there at that moving average, which also means that it's getting support near that 50-day line as well. The lines are really not terribly dissimilar. So this is something interesting. So clearly, as you see here, and as I've talked about, I've heard Tom and Steve talking about recently, the Russell 2000 was showing some weakness ahead of the other indices, perhaps the canary in the coal mine, so to speak. And, you know, it's far from certain that selling pressure on the indices is over. However, it is kind of interesting that the decline stopped. And let me go back to a weekly chart and we can take a look. There we go. So you're at that 10-week line right there. So clearly, it's interesting that the IWM, the Russell 2000 ETF, getting support just near that 10-week moving average. So, one of those kind of things you go, it's potentially a sign that this could consolidate along that line rather than take a precipitous drop, of course, depending clearly on some of the market sentiment that we see going forward. Too soon to say. Obviously, you could make an argument that a further consolidation in the broader market would flush out some of the excesses after recent run-ups. But what we do here on the Small Cap Roundup, rather than wishing and hoping and thinking and praying, right? That old song, remember that? Rather than doing that, conjecturing, arguing with the market, that's the worst thing. I just watch what is actually happening. And what we're seeing that's actually happening is the IWM, it's down for the week, but finding support currently at that 10-week moving average. So looking at some of this renewed volatility then that we've seen in the past few sessions, one of the interesting points has been that many of the best performing stocks, the ones that I tend to track really across all market caps, just generally speaking, and I don't mean the most widely traded, I don't mean the best known, I don't mean necessarily Dow components, but the real technical price leaders, and typically they're not Dow components, although some of those have been performing well recently, as many of you know. A lot of the stocks from the leadership category did not suffer too much, as it turns out, even after Tuesday's overall market sell-off. And earnings news has a lot to do with the action in individual stocks still, even amidst this bigger macro picture. So let me put up a chart of a mid-cap that I was looking at this morning. And this company does report earnings after the bell. Many of you may know this stock. This is Ulta Salons. ULTA is the ticker. And like I said, it reports later today. Now, this stock I was just looking at, it is relevant for a few reasons. It's a fairly recent IPO. Let me see if I can get this up here just for a moment on a monthly chart. Okay, so there's a monthly chart for you there, and let's see. Okay, go out a little further on that. So this went public back in October of 2007, and you can kind of see the earlier part of 2008 here if you're watching on Tiger TV. On the left side of the chart, I'm indicating, if you recall, October 2007, that actually kind of turned out to be bad timing in a sense for an IPO, because that was just before the general markets began turning lower and sinking into what eventually became that bear market. But after the bull emerged back in 2009, and I'm going to go back to a weekly chart on here. We'll just get a little better view on a weekly. So after the bull market emerged in March of 2009, Ulta Salons became a big winner, and it really popped onto my radar at that time. I owned that stock at various times during that big run-up, 2009, 2010. I don't own it right now. And this is, as I mentioned a moment ago, it's a mid-cap, and some mid-cap and smaller cap names, the ones that we talk most about on this show, of course, from the retail sector, are continuing to show leadership. And that's the point I wanted to make about the market leaders. And now I'm going to go to a daily chart, just going all over the place on this. So here's what Ulta did on Tuesday. It was actually down about 0.4%. Didn't fall much as the market plunged, but look at this. This is really interesting. If you're looking on Tiger TV, the volume on the downside day for Ulta on Tuesday, when the markets were plummeting, Ulta showed lower volume than the prior session, really didn't register that much of a decline, and was able to bounce back again in yesterday's session. So that, my friends, is technical strength. Those are the kind of indicators that I'm tracking. So obviously the stock rallied after pulling back on Tuesday, rallied to a new high again this morning. So as I mentioned, it does report earnings after the close. So what would I do if I owned this stock? It's been just a tremendous winner here in recent weeks. You can see this nice uptrend. I would pare back the position. This is a winner. You want to let it run, so you might hold a partial position in this one, but as we've all seen time and time again, it's often the case that just any whiff of less than stellar news in a quarterly report or in the guidance particularly can send a stock lower. So I like to preserve capital. You can always re-enter the position after earnings, because if the stock continues to be a leader, a new technical buy opportunity will likely present itself. So that's just a look at one of the retail sector leaders. I want to put that in the context of the small cap retailers. I'm doing a column for realmoney.com over at The Street. I'm a regular columnist over there. And I am going to be looking at some of the smaller retail names. So Ulta is in the cosmetic space, and in my mind anyway, clothing is a related area. You got to have your clothes, your hair, your makeup, right? All coordinated. Oh, and for guys who are listening, by the way, Ulta is seeing its business for men's hair and skincare products growing. So, just saying. So, in the clothing area, one small cap that I have talked about on the show, let me put the chart up here. This is a company called Genesco, GCO. And you may not know that name, but they operate the Johnston and Murphy shoe stores, Lids hat stores. You see those in a lot of malls and some other clothing chains. Now, this company delivered a better than expected earnings report last week. So let's look at the chart here. The stock emerged from a consolidation, and this is a weekly chart. So where I'm kind of indicating there on Tiger TV, it pulled into a consolidation in the latter part of 2011, as did many, many companies here. And it emerged from that back in December, then pulled back again, just briefly, found support at that 10-week moving average. So we are looking at a weekly chart here, found support very nicely there, right at that 10-week average. So then it trended higher and bolted last week. It's out of buy range at the moment, and this was after a better than expected earnings report. So it's out of buy range at the moment, but right now it is pulling back a little bit, and that's normal to see a stock pulling back with a bit of profit taking after a run-up, after that kind of big gain. Not at all surprising. This really illustrates what I often say about continuing to track stocks that are at new highs. I know that it seems frequently that it's counterintuitive, but often, that degree of buying right here, this big jump in heavy volume, you've seen quite a few above average weeks of volume in the past quarter. That does indicate support from the institutional investors. We want to be following in their footsteps wherever possible. So it's normal to see a little bit of selling. We can watch for a new entry point below the old high. That's what we'd be looking for. Something below the prior high, perhaps as it consolidates in an orderly fashion, begins to approach that previous high, could offer a new technical buy point in the weeks to come. So let's see here. I have a little time left in this segment. I want to show you one more. I love this ticker right here. This is, as you see, if you're watching Tiger TV, Body, B-O-D-Y. And this company is Body Central. And it went public back in October. I'll just put this up on a monthly chart so we can take a look there. And the monthly chart doesn't really show up quite as well, but you can kind of see that. I'll tell you what, I'm going to come back and we're going to look at this stock a little bit more after the break, because this is another interesting one just to spend a minute or two on. I'm Kate Stalter. This is the Small Cap Roundup. Give us a call, 877-927-6648. I will be right back.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Back with the Small Cap Roundup here. Okay, I wanted to take another little bit of a longer look at this stock that I have up there on Tiger TV. Body Central, BODY, is the ticker. And as I mentioned before the break, this stock went public in October. It operates women's clothing stores. The company is based in Florida. And this has really been a tremendous fundamental and technical performer. As you may know, if you've listened to the show before, I make my buy and sell decisions based on technicals. I do incorporate some fundamentals into the analysis, though. I understand that analyst estimates can be wrong as frequently they can underestimate as they can overestimate, actually. But nonetheless, it just helps to look at what Wall Street is expecting on a stock, on a company's performance at any given moment. It just gives you a snapshot of where the institutional confidence is in that particular company at the moment. So some good estimates on this company. Now, having said that about the estimates, I need to say right away, this company reports after the bell today. So the chart is looking good right now, in my view, and I'll talk about that a bit. But as of today, this is not something to enter into a position the day that it's reporting earnings after the close. This is a very small company, definitely fits our definition of small cap here, market cap of around 465 million, trades about 185,000 shares a day. So, you know, you might see some strong action one way or another after the report. So we'll come back and visit this one. We'll revisit it after Tuesday's show next week, because there's a lot to like about this stock. So we'll see how it looks after that report. I want to just go over and take a minute here on a daily chart. So right here, you see the 10-day moving average. You see very clearly here on a daily how Body Central is consolidating along its 10-day line below its previous high from February 27th. The high was 29.49. So as of today, it's trading at around, 28.49. So it's below that prior high, getting nice support there at that 10-day average. So this, if we weren't looking at earnings this afternoon, I would be saying that this could be in a buy range right now. And also another nice sign, you're seeing some lower volume as it's been consolidating, generally speaking, in recent days. So that's another good thing to see. However, given that the fact that we've got that report coming out after the close, not touching this one right now, we'll take another look on Tuesday and reevaluate that one. Okay, I'm going to go back to a weekly chart, and I want to show you another small cap clothing retailer, women's clothing retailer. This is a pretty interesting company. This one's called Ascena. Actually, I'm sorry, I misspoke there. This is actually a mid-cap, Ascena Retail Group, ASNA. I'll just take a look at that one, because this is, by some definitions, this really was a small cap pretty recently, actually, because it would have come in under that $3 billion market cap. It's got a market cap of about $3.2 billion right now. And as you know, a lot of the fund managers we talk to here on the Small Cap Roundup, they like to keep their ceiling at about $3 billion, which is consistent with the S&P 600, the small cap index over there. So that's where they like to keep their ceiling at the time they make a buy. So this is one that actually you have seen some pretty decent institutional buying into this one lately. So has probably pushed the market cap above that $3 billion range not that long ago. So I'm sure. Obviously, this is a holding in a lot of the smaller cap funds. So what this company does, they operate Dress Barn, which used to be publicly traded, and I did used to own that stock. That used to be a good stock, technically speaking, and I shopped there too. And no, I am not one of those buy what you know investors. I buy on the technicals. It so happens there's a lot of very interesting companies that have been showing some good technical strength lately, but I'm really completely agnostic when it comes to the sector, the industry. So that's really where I come down on the idea of which sectors or industries to be buying into. It's the stocks that are performing well. Never mind if it's an interesting so-called business or not, but most of them are. Anyway, a few years ago, Dress Barn was a leading stock. It was taken private and then acquired by Ascena. Now, on the weekly chart, let's see here. Again, I want to give you a better view of this. Okay. So you can see what's happening here on the weekly chart. All right, we're going to have to come back to this one maybe after the next segment. Stick around. We have Jerry Slusowitz coming up in the next segment. This show just goes by so quickly. He is a terrific advisor, has a great perspective on small caps. You want to stick around and listen to Jerry Slusowitz after the break.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing
the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley of Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Welcome back to this segment of the Small Cap Roundup. This is one of my favorite segments of the show when I get to talk to an advisor, an asset manager, somebody to give us some perspective on where he sees small caps in the market. Before we go into that, we did just have the European close, and as fully expected, indexes over there closed higher. They'd been trading higher all session as we approach this much ballyhooed, and I guess I'm ballyhooing it a bit myself, this Greek debt swap agreement deadline that's coming up in a few hours. Okay, we have on the line here Jerry Slusowitz of Pacific Financial Planners, and he's also one of my fellow columnists over at Real Money at TheStreet.com, where he writes about ETFs. And this is obviously the small cap show, but I do talk about other market caps to put the small caps in the broader market context. Jerry, one of the things I've always appreciated about your approach is that you will go into some of the smaller caps, even lower priced, potentially more volatile investments, but within an overall portfolio where you also include, obviously, income investing. So give us your view today of where you see portfolio allocation and where the smaller caps might fit in.
Well, Kate, thanks for having me on the program. And absolutely, small caps are an essential part of anyone's portfolio. Everyone thinks of small caps as being higher risk because they are, the future large caps of the world, and some don't make it. So there's a little bit more volatility within the sector. But you know that we just had the 3-year anniversary of the market bottom just a couple of days ago this week. In that time frame, if you look at, for example, the S&P 500, which is up basically 100% off that low of March of 2009, or the Dow, which is up to 94% off that low. If you look at the small cap index using, let's say, the Russell 2000 as the proxy, that's up 127% from the low. So if you don't want to participate in, the leadership, if you will, from that low, or if you didn't want to, then you would avoid small caps. But, to really round out a true asset allocation, small caps become a very important, integral part of getting return. In addition, Kate, you mentioned the dividend, all right? And myself, especially over the last year, as it's very widely held by pundits all around the country, that looking for dividend yield is so important after 2011's flat returns by the S&P. Well, I agree with that concept. That pretty much everyone does. But again, using the Russell 2000 as a proxy, for example, the small cap aggregate dividend is 1.3%. When you compare that to, let's say, the S&P 500, which is around 1.9%, I mean, yeah, you are getting a little less dividend income, but compare that to, let's say, for example, another kind of more aggressive sector, the NASDAQ, the QQQs, the NASDAQ 100 proxy, is only paying 0.7% dividend. So you can actually kind of come in between, still get alpha on the return, and actually capture some dividends. So it's not like you can't get dividends by using small cap stocks. There's plenty that pay very nice dividends.
Now that kind of leads into, maybe it's a little bit of a tangent, but I think it's interesting, Jerry, is something that you and I have talked about in the past. A method that you have of adding some alpha to portfolios, whereby you go into an additional weighting of a stock that may be a holding in a fund. Talk a little bit about that.
Oh, well, yes. One of the things that we try to do here at Pacific Financial is we're always looking for sector rotation. We're not strictly buy and hold and hope type styled investment management. So when we do find sectors that are leading, what we try to do is, let's say, for example, is we'll use some ETFs. As you mentioned, I do write about those. But to find alpha, we'll go inside that sector and then pick a few stocks that we feel are leading that sector, and we'll take a position in those. A very good example of that today, Kate, is in the small cap arena. My favorite stock, which is we have a position in, and it's a bit extended, but for example, what we have done in the past is we looked at Nu Skin. All right, the symbol is NUS. They're a basically personal care products, nutritional supplements out of Provo, Utah. Pays a 1.4% dividend, so you get a little bit of dividend yield. It's a bit extended at 22 times earnings, but it has a 32% return on equity. Institutions are gobbling this up as well. And when you look at the big downturn we had this week, the stock really didn't get affected at all. It kind of broke again last week to new levels, and has held up quite nicely through the downturn. When you look at the earnings, 7 of the last 8 quarters, the earnings have been double-digit earnings growth. It's an excellent company, and it's an excellent example of what I do for my clients, saying, okay, we like small cap, so we might buy the ETF, let's say IWM, for the Russell 2000, and then we'll say, let's add some alpha by buying what we feel is a leading stock within that sector. And in this case, one of them is Nu Skin, and I do have others if you wanted to talk about them.
I do, but I just want to comment. You touched on something that I was also talking about earlier in the show, and I was talking about it with regard to Ulta salons, which many of these leading stocks right now did not really suffer that much in Tuesday's market damage. And it's interesting because I hadn't been following Nu Skin, but I'm looking at this. That did kind of exactly the same thing that Ulta did. Really, did not do that badly Tuesday. and rallied back.
Yeah, down 1.2% on the day. We're higher than it was, before that, and it really kind of broke out last week, the end of February, and it obviously didn't even come close to retracing any of that. Didn't give it back. So, there's a company that's done very well. I like the fundamentals. I like the technicals. Like I said, to buy, it might be a bit extended, but I use the stop losses all the time. Around 52, I think 50 would be a good place to put a stop in there. 52.70 maybe, and at 57.50, it's about 10%. I usually try to buy them a little tighter than that, but we have a position in that stock.
Okay. Yeah, tell us about some of the other smaller caps you're looking at right now.
Well, another company that is a small cap stock that I just really like the concept, and it's a REIT, and we were talking about dividends, and one of the things that I think a lot of people are looking for is dividend income, and this stock just recently went down. Now, not on Tuesday, but it's trending up. It's got a nice channel. It's American Campus Communities. American Campus Communities, the symbol is ACC. It's a REIT that owns and manages student housing properties in 27 states with close proximity to 68 colleges. Now, I have always thought that you have a built-in market when you own property near a college campus. So, what a great concept. And the only thing that maybe the cleaning bill has to run up a little bit from those college parties. But the sales growth is double-digit for 7 of the last 8 quarters. Institutions' holdings are increasing, and it's paying a 3.2% dividend yield. I mean, that's the main attraction here is it's a REIT that has a 3.2% yield. Again, a little bit higher PE with 22, but all small caps are a little bit higher with the PE. The Russell 2000 I show is PE average of around almost 25 compared to the S&P of around 16, so it's not overextended relative to the group. But REITs are very popular, especially for income investors. You can get the total return with real estate values being depressed, but this is just a rental income, and it's paying you a nice return of 3.2%. So, it's one of the companies I like a lot, and we're looking at this, the stop loss, somewhere around 39.90, 42.17 today. It's not a bad value to get in here and play this up, which has been going up for some period of time.
Now, let me ask this. You're talking a little bit about some of the dividend yield on some of these, and I agree with you, 3.2%. That's nothing to sneeze at there. But how do you, in your models, how do you balance capital appreciation versus income? How do you factor that in?
Well, again, we do have 3 models, here with Pacific Financial Planners. Some people are strictly income, so we have to have that yield, but more we have the majority of our clients are either in balanced or growth, and then we're trying to look for dividend yield in the fact that, again, historically, dividend yield is a big component of total return outside of the late 80s and 90s. The problem is everyone still remembers the late 80s and 90s, and everyone's going, well, growth is how you get your return. But if you look at a longer stretch, let's say 60, 70, 80 years of market returns, almost 40% of the return generally comes from dividends. So, if we're more in that traditional environment in this market, well, then you definitely want to have yield as part of it. But I don't strictly go for that. I'll buy companies that don't have any dividend. And for example, one more small cap that I like is a company called Salix Pharmaceuticals, SLXP. S as in Sam, Larry, X-ray, Paul. And again, another. I actually really like the healthcare biotech sector a lot. I own IBB within that sector as an ETF. And again, here's a small cap stock, does not pay a dividend. It looks like it's ready to break out here. We actually, again, have a position in this company, but it's staged another base over the last several months, And if this thing can get back above 50.28, and it's trading at 49.46 today, this thing looks like it's ready to take off. So I'll put that in everyone's portfolio except for my income clients, because this does not pay any dividend. But if you look at the earnings, Kate, this sale of pharmaceuticals, I mean, it's fantastic, and their sales growth is fantastic. The institutions are seeing this, and it's only trading at 17 times earnings, so it's a little cheaper relative to its peer group. And I really do think that this company can do well, because they specialize in gastrointestinal diseases, and I think with the market volatility lately, a lot of people are suffering from those types of issues.
Right, it's timely.
Well, and again, a little humor there, but in all sincerity, I like the sector. I think that is, everyone talks about tech, but I still believe that biotech is overlooked by a lot of people as really the amount of advancement that we have in the medical field is just going to continue to be dynamic going forward. So I love the field that this is in, and it doesn't pay a dividend. So it really depends on the client situation, but not every position in your portfolio, it almost doesn't matter who you are, should just have, everything has to have a dividend. I mean, you want alpha as well, looking for total return. But, I'll be honest with you, Kate, in this environment, we are overweighted towards dividend-paying issues because, especially in light of last year, I know it's been a great start to 2012, but last year, in a flat environment, without that yield, we wouldn't have had, a whole lot of return.
Now, let me just ask you a little bit. We have about 2 minutes left here, Jerry, so just kind of to wrap up a little bit today. And this has been great. I've really enjoyed hearing your views today, as always. But how are you just overall sort of allocating small cap? Does it depend on a client's objectives, a person's age? What factors do you take into account?
Well, Kate, again, I think even seniors, if you're looking at an age thing, could have some exposure to small cap and should have some exposure to small cap stock in a normal environment because of the fact that it will offer, generally speaking, more dynamic growth. In the last 12 months, it has underperformed, let's say, for example, the large cap stocks, but over the last 3, 5, and 10-year time frames, over the long term, you're going to get more return with small caps than you will with large cap stocks. So from that viewpoint, as an overall portfolio plan, you want to have exposure to that. But, we are fairly dynamic. We'll roll in and out of different sectors. But as much as 20% for an average client, I think, should have exposure to small cap stocks as just for an average person. The more conservative, maybe you tone that down a little bit in percentage, but I think everyone should have some exposure to the small cap sector, Kate.
Well, Jerry, thanks so much for joining us today. I think that about wraps up our segment. I think Tom Petty is going to start playing his music here in just a moment to tell us it's time for us to go. There he is. As always, great speaking with you. I'll definitely have you come back on sometime. We'll have to talk again, Jerry. Thanks a lot.
Thank you, Kate.
All right. Stick around. We've got one more segment today of the Small Cap Roundup. We'll be right back after this.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Back for our final segment today, rounding up the small caps. Great discussion with Jerry Slusowitz. I always appreciate his insights. I've known him for several years, going back to the days when I was at Investors Business Daily. So I know him to be a successful growth investor. Okay, I put up here the chart that we were looking at before we got on the phone with Jerry. This is Ascena, once again, ASNA. And what I wanted to show you about this particular name, just to complete my chart analysis that I did not get to finish before that. Okay, so you see the big pullback here in 2011. There we go, back in August when the market tanked back then. Okay, you had this little prior consolidation between, say, April. It went into a consolidation in April and broke out of that back in July, maybe late June, early July, not giving it much time before the market tanked. But in any case, the bullish aspect to what I'm seeing on this chart is that the low in the second half of 2011 undercut the prior base, flushing out a lot of the traders, investors who no longer had any conviction about this particular stock. And I show a lot of examples of that kind of price action here on the show. And you do see that Ascena did rally higher after that. So we had the bullish cross back here in about January, earlier this year, where you had the shorter-term 10-week line crossing above the longer-term 40-week line. And ever since then, the stock has been trending beautifully above that 10-week average. Now, this one is not in buy range at the moment. It is too extended. You want to wait for a new opportunity to buy on a dip with moving average support. That's absolutely crucial. I saw an article from about a month ago from Deal Pipeline that Ascena is looking for additional private equity or M&A deals to acquire additional clothing retail chains for its brand portfolio, Charming Shops, another women's clothing store. That's one that this company is said to be looking at. So clearly, this is a company that's looking to grow through acquisition. So it's another interesting one to watch on a pullback. Let's see. I've got a little more time today. I did have more stocks I wanted to show you. There's always stocks that I want to take a look at. So this is Tango, TNGO. This came up in one of the interviews that I did a few weeks back, and it's one that I've also been tracking for quite some time. Well, I say quite some time. It's really not a very old stock at all. This went public in July 2011, has been trending higher. You see that it really doesn't even have a long enough history as a publicly traded company to even have a 40-week moving average yet. It's still too new. However, you do see terrific support trending higher above this 10-week line. It pulled back. It got support there, rallied to a new high. Could be consolidating again. So this is another one you might want to be watching to see when it offers a new buy point. The previous high, let's see, was back here at 1990 last month. So as of now, you'd be looking for it to get support at the 10-week average. Can't tell yet. Way too soon to say whether this is going to go on to form a base or begin rallying again and reapproach that previous high. This is one, I talked about the estimates a little earlier, just to look at these as a snapshot of institutional conviction in a stock. And this one has some terrific annual estimates coming up. Great fundamental track record on this one. And this is an enterprise software maker. So that's it. I always say this. I can't believe how fast these hours go by. Great to be hanging out with all of you for an hour. My thanks again to Jerry Slusowitz. I will be back here on Tuesday morning with another edition of the Small Cap Roundup. Have a great weekend until then. I'm Kate Stalter, signing off.